Hello everybody. Today on the menu we have Twitter. Let's get right down to it. 10-year chart, monthly candles. I'll start off by identifying resistance and support. Have some support here at the 1430 about level. There is it, 1471. Let's identify the resistance. Oh, there's a probable breakout in progress right now for Twitter. So I'm just going to wait to set that alert. I'll set it up here for now. I'll trace my line where the resistance was. Right here. Take an arrow. Measure and move. Top to bottom. Add it to the breakout line. And right now, if we'd have a monthly close above the 23, 24 line, we're going to get an implied target of around 32.90, which coincides with a wall. A wall is previous support turned resistance, or resistance turned support. So right now this used to be resistance. It went down, broke down, and after that, retest here. That becomes the support here, break down, and then becomes resistance. Test here, and then it falls down to this trading range here. Resistance here, support here. Resistance here, breakout. When I have targets of charts, I always look at to make sure my greed isn't biasing my thought process. I always look to see if there's a previous resistance via the concept of a wall. So right now this is nice, right under it. That means less resistance for you to reach your possible target. Increase the probability of reaching your possible target. So that's nice. Let's go. We could drill down to the 5-year weekly. See how that is tuning out to be. And on the weekly, you could see that you have also a breakout in the progress. So if you have, we'll wait for the Friday weekly close, and that's a good sign that the breakout will continue. And let's see if we have some timing on the 1-year daily chart. Oh, it's gonna condense that. See all that noise? A lot of noise. The real breakout right now is in this candle. Well, this week's, see, there's many candles here. Lots of noise, daily fluctuations. It's not really clear where the breakout is. You have more breakout patterns on daily charts, which are hidden in the weekly chart, and which are those hidden into monthly charts. Each candle encompasses many other sub-candles of smaller time frames, and it just reduces that noise, but also it gives you a lot less signals to get into a trade. So on the daily, the breakout would have been here, a breakaway candle, not a horizontal line of a breakout. I give less value to that than I would if it would have been a rectangle here, like that. Let's go back. So that's pretty nice. I like that. Is this an A++ stock? The range 15 to 20, that's more than 10, 20%. It's pretty much a wide range. Still not bad. It's been doing this since January 2016. So that brings us 2 years of a consolidation sideways bottom pattern. And I'll definitely keep an alert for that. I'll set an alert just here, a little bit above. But this is a definite comeback at the beginning of the month. So February 1st, you come and and see where that candle closed. After that, we could go through our risk and money management protocols. Wherever the price ends, that's going to be our buy for February 1st. So I don't know where it is. And your sell stop, your risk, is the delta between where you enter and the bottom of the wick, which will be your trigger out. And you multiply that, or you put the correct position amount for that value, the delta here, the value of the money you could lose, less than what your money protocols dictate. Usually 1% is good. You need to be wiped out 100 times in a row to be totally wiped out. And that's good. Keep an eye out for Twitter. Nice move there. And you'll see if this was noise. Well, by the end of the month, the candle is going to have retraced. It might become red, and it could close below this breakout line. Twitter, let's go back to the 10-year chart, full view. What's interesting here is the previous breakdown. Just before opening my trading, I always like to go to my trading software, my main blog website. Let's go there now. And I did a little search for noise. Let's go do that later. Let's go do a little search for Twitter, because I remembered having done an analysis for Twitter. And I did analysis back in 2015, October 23rd. And I was just curious to see how that panned out. I had drawn some lines in between about that 52 level and a breakdown at the 32.50 level. And had measured an implied move to 1463. I had drilled down on the weekly. I saw on the weekly there was a breakdown also that a few weeks earlier, and there was a breakdown continuing, and on the daily had broken down a while back and had already started its downward trend toward the target. You could see how I set it up here in the blogs, lots of links, and this was a link to definition, I think, stock charts and definition of what a classical chart pattern is, the rectangle, the criterias, targets implied, etc. So that's always fun going to the blog. I know I'm doing a podcast now, but if you want to be able to read at your own pace, I invite you to go and just go through the blog entries and follow the links. Lots of examples. You could use my experience to your advantage and just have that much more information in your head, which will help your learning curve. Maybe avoid mistakes I did, and or just figure out how you want to do your things the way you want. Let's go back to Twitter. All right. Here it is. And if we scroll back to that time period, let me cheat here. Scroll back. And I believe it was here. This was the breakdown candle. It closed below the breakdown line. And after that, it just started trending towards its target. Did it reach a target? Let me zoom that back in. All the way to today. And $14-15. Yeah, here. You see, you reach a target and went down as low as this candle went down as low as 1372. You have a multi-year top. I think it was a year and 3 months. The top formation here, breakdown confirmed with the monthly candle close. This candle here, and after that, 13 months of consolidation to do in 1, 2, 3, 4, 5, 6, 7. They reach out. Yeah, 7 months you get to reach your target. And that's what happened for Twitter back then. And I could have been bearish back then. I could be bullish right now. Don't really like those terms. there's like an emotion implied into it, and people get attached to that. So if you want to take out the emotions aspect to make you a more consistent trader, consistency is easily attained if you remove noise. Keep it simple. You'll be less distracted from your consistent framework. You'll be able to apply what you have to apply with less interference, less noise, and hopefully make less mistakes. And when you click buy with your bracket orders, you haven't done any human errors. Because sometimes you could be everything's good, but something goes wrong for your trade because you weren't careful when you set up your trade parameters when you click submit. All right, thank you for today. That is good. See you at the end of the month. Twitter. Ciao.